Hello and welcome to On the Record with me, Shereen Bhan. We're here to talk about a journey that's been steady, exciting and in many ways disruptive. 40 years on for Kotak Mahindra Bank. Joining us now to talk about the road ahead is Uday Kotak and Ashok Vaswani. Gentlemen, congratulations and many thanks for joining us. Mr. Kotak, I want to start with you. Starting with 30 lakh rupees, a small NBFC, 40 years on to where you find yourself at Kotak Mahindra Bank. What is the most gratifying aspect of this journey so far? But more importantly, what's the ambition from here?
I'm excited about the fact that India has transformed so dramatically in this 40 years. But when I look at the journey from here and the future for India, the financial sector and Kotak, I'm even more excited. So this is just a point in time in history. 40 years may seem a long time. For me, it seems like yesterday. And it is exhilarating in terms of the opportunity ahead.
But, speaking of the opportunity ahead, what is it that you foresee in terms of where you believe the bank will be, in terms of pecking order, in terms of your loan book, in terms of your global aspiration? Where do you foresee the bank? I'll come to the execution aspect with Ashok in just a second.
I would love to see Kotak as one of the leading global scale financial institutions from India. And that's my dream. It's not about just how large we are, but also how good we are and how we are keeping pace with the times and demonstrating that we can break the glass.
Well, break the glass ceiling, Ashok Vaswani. It falls on your lap then and your table in order for you to deliver on that promise. But, he says 40 years feels like yesterday. It's almost 2 years for you here at Kotak Mahindra Bank. Feels like yesterday?
Oh, it definitely does. It's been an incredible ride. And I'm so happy I made the decision to come back to India and take on this assignment. That was a good decision.
A good decision, but to build on what we just heard there from Mr. Kotak, world class, but also world size. So let's talk about the ambition in terms of how much you intend to grow your loan book, what you believe it could potentially look like over the next few years. Today at about 5 lakh crores, Axis Bank just above you at almost 11 lakh crores. What is the aspiration on that front?
So, Shereen, actually it is about an ambition on profitability, which is obviously linked to balance sheet, but essentially profitability. How, as a group, can we become maybe the third largest, most profitable group, financial services group in the country amongst the private sector kind of banks, and more importantly, really serve our customers and become, the kind of most valued franchise from that perspective. And that's the journey that we're on.
Well, speaking of that journey, and you just unveiled this One Kotak sort of campaign and One Kotak ambition that you've put out there as far as customers are concerned. How should investors read that from an unlock and a monetization perspective? Could we potentially look at some of your businesses being unlocked, being monetized in the near future, or is that not a consideration at this point in time?
So, Shereen, think about it. Kotak is the broadest financial conglomerate in the country. There's nothing that's like the Kotak financial conglomerate. This conglomerate allows us to take advantage of whatever changes may be happening in the financial services sector, whether it's in favor to investor, whether it's corporates going from bank balance sheets to corporate bonds, capital markets. We can serve these customers across the group. That is the power of this group. This also allows us to identify customer segments that we want to really go after, bring together products and services relevant to them, and build out propositions. And where we've done that, we've got really, really good results, whether it's with the private bank, our recently launched Solitaire program, our 811 program, the SME segment, or institutional clients for that matter. That is the power of Kotak, of being able to bring together and meet the holistic needs of the customer. That embedded value is growing. Why would we monetize it early?
No, early, but at some point you will? Or intend to?
Right now, very early. We'll see what the future holds. But frankly, I honestly don't see the value of monetizing it right away.
At this point in time, I ask you this also in the context of what you're seeing happening around you. I mean, things like the Grow listing, an 8-year-old company listing in the manner in which it does that kind of tempt you to look at what's happening in the market?
Not at all. The embedded value of Kotak is growing at a compounded rate. And there really is no reason for us to kind of list at this point in time.
So no departure from that
no departure.
Mr. Kotak, an overarching view on this aspect, because I'm sure that this is something that you discuss and debate very often at the board level.
Shereen, I think the financial intermediation space is undergoing transformation. One is thanks to technology. Second is the move from saver to investor. Third is the flexibility across the intermediation space, which is expected by customers. And therefore, to create inherent disparities between different segments is inconsistent with the best way to serve customers. Therefore, think about yourself. You may be a saver and an investor in one. Therefore, as a financial intermediary, we cannot think about ourselves as a bank or asset management company or as a broker. We've got to think about wherever the intermediation moves, the group is there to serve you. And therefore, if that is the basis, the theme about One Kotak is an extremely powerful theme where the newcomers rightly start with a vertical. But ultimately, the challenge is how do you serve your customer in totality?
You know, you talked about the fact that the banking space is seeing a big disruption and a transformation, and you believe it's going to get harder for banks to be able to get deposits. It's going to be harder for banks to grow in the manner in which we've traditionally seen them grow. So that creates a challenging environment for you. But, you know, on the back of that, what do you believe is the big challenge for banks in general, but also for Kotak Mahindra Bank in specific?
I think that's where the challenge is essentially twofold. One, how do you keep up pace with technology? Because larger deposits are going to market instruments or market platforms like mutual funds. And therefore, the ticket sizes of deposits which remain with banks will reduce. However, there is a large population which needs to have basic payment and banking facilities. The cost to serve in the physical world is much higher. Therefore, how do you create a business model which is commercially viable at keeping in mind the reality that large ticket, lazy money which remain with banks in current and savings accounts will not remain or will not remain to the same extent. Second, how do you capture these flows which are still within the financial system within a group? So combine this, I think, an integrated financial conglomerate with a focus on excellence in the verticals is the key to the future.
Well, speaking of that being the key to the future, and I'm using his words that banking has been lazy, how do you unlazy banking?
I think he talked about lazy deposits and inertia. And that's true, right? With technology, inertia is going to go. And that's exactly the point, right? You need, first of all, the ability to serve a customer in different places. So in this case, it would be, let's say, the bank, as well as, let's say, Kotak Securities or Kotak Asset Management. But even within the bank, Shereen, it's about what are the customer segments that you're targeting and how do you provide products for that? So go back to what Uday said about a vast majority of people who are looking to get basic banking facilities, our ability to acquire them digitally, service them digitally. With our 811 proposition, that's exactly what we're doing, right? And that builds granularity of deposits. That gives us the confidence that we will be able to grow our deposit base to meet our growth needs on the asset side.
But you know, you said that profitability is going to be the focus area for you. So given what we've seen as far as the last quarter is concerned, you know, do you believe that we're perhaps, as far as profitability is concerned, do you feel like you've peaked, or is there something that you can operate by way of levers to do better in terms of profitability? And is the era of 5% kind of NIMs behind us as well?
No, so Shereen, I think we should, looking at one quarter may not be the best way to look at it. Longer term trend, right? I think from here on, NIMs will stabilize and even potentially improve unless there's another rate cut, which is a completely different conversation. I think in our case, you're going to see, like we said at the quarterly results, credit costs kind of moderate. And we are spending a lot of time and effort automating and digitizing Kotak, which is allowing us to get really efficient on costs, right? So I'm optimistic that we can kind of grow our profitability. Last year, capital markets was a very, very good we're having a great year. This year, not such a great year. But that again is the beauty of Kotak, right? We fly on 4 engines. Sometimes 3 engines are flying, sometimes 2. The day 4 fly, it's really, really soaring.
When do you believe or anticipate all 4 could fly together?
It's a function of the macroeconomic environment as well. But I really believe we're very well poised to have all of them kind of kick in together and move fast ahead.
The macros, Mr. Kotak, and you said we'll get into the rate cut debate later. So let's get into the rate cut debate. Record low inflation. What's the expectation? Rate cut as early as December or sometime early next year?
Shereen, look at the rate cut syndrome in 2 parts. One is the short term, okay, which has an impact on short-term money markets and interest rates in the short-term economy. But long-term rates are more sticky. Therefore, you've seen 100 basis points drop in rates at the short end, but at the long end, the drop is barely 20, 25 basis points. So the marketplace actually is saying something. The yield curve, which was flat, is now getting to be positive. And therefore, markets believe that these rate cuts are not going to lead to sustained low rates for the long term. Otherwise, they would reflect in the 10-year bond.
But do you anticipate a rate cut in December or early next year?
I believe between December and February, there's a fair chance of 1 rate cut.
25 basis?
Yes, that's what I feel.
Ms. Vaswani?
Look, honestly, it's up to the RBI and how data plays up. The data definitely is skewing more towards another rate cut. But let's see how it kind of plays out.
You know, speaking of factors that are impacting sentiment as well as impacting flows, I want to address what we're seeing happen in the banking sector. It certainly seems to be the flavor of the season as far as FDI is concerned. Large deals happening from IDFC Bank to RBL to Yes Bank to Federal Bank as well. Mr. Kotak, what do you make of this? I know you tweeted saying that it's a welcome sign, but you hope that it will create a level playing field. What do you make of this?
I think, Shereen, first you have to distinguish between private equity and strategic. So out of the deals you mentioned, there are 2 strategic deals.
Yes.
One is SMBC into Yes Bank, and the second is Emirates NBD into RBL. That is very different from BlackRock and Warburg into IDFC and Federal Bank. Those are financial investors at the core. Maybe they are playing for some strategic to buy those banks in the future. So who knows? They're in the business of producing financial returns. The strategics are taking a long-term commitment into India. And frankly, I would welcome it as long as we have consistent rules for similar financial institutions across the board.
Because at this point in time, it's case by case, but the fact that we're now looking at the regulator giving the go-ahead to control deals, what does that signal as far as the willingness of the authorities on this front?
I'm glad that India is feeling more secure and bold. We saw competition come into investment banks where majority was allowed in early 2000s. You saw it in securities, asset management, life insurance. So banking was the last bastion, and I'm glad that the policymakers are confident that Indian financial sector can withstand the onslaught of global FDI and still maintain the ability to remain truly Indian and become world class.
You know, a strategic investor in Kotak Mahindra Bank, you don't need it, but you know, is that even up for consideration?
Last time I saw the cap table, that strategic investor was Uday Kotak.
So not on the table.
Certainly not.
But how do you see it from an operations point of view? 2 strategic deals being done, private equity interests. You know, what does it change anything in the marketplace?
It's actually quite fascinating, Shereen. On the one hand, yes, we talk about, obviously, there's kind of covered the deals that have happened. On the flip side, we've had foreigners also leave. I mean, Citi sold its consumer franchise. Deutsche has put up its business for sale. We bought the Standard Chartered personal loan portfolio. And so it's just an interesting kind of phenomena. Let's see how it kind of plays out. Honestly, competition is welcome. It keeps us on our toes. And we just got to get smarter, better, and move faster ahead. And that's our goal.
Smarter, better, bigger. And I'll ask you this in the context of IDBI Bank, which, it's been 10 years now since ING Vysya. The question is whether you still have the appetite to do IDBI Bank. I know you continue to be in the frame, Mr. Vaswani, so let me direct that question to you first before I get a broad picture there from Mr. Kotak. IDBI Bank, how serious is Kotak's ambition there?
So, we've had this conversation before. Look, we look at every single opportunity there is. Obviously, our goal is to transform for scale. So we look at it. If it makes strategic sense, then we go to the valuation and see whether financially it kind of makes sense. And if it makes sense, yes. Also, you got to say that we are on a certain path, right? We're on a certain path, transformation, or they talked about the changes in financial services, how technology is changing a whole bunch of stuff. And therefore, what is our priorities? What is our management mandate? Where are we going to really spend our time? Is it going to be spending time in integrating HR and payroll systems, or is it going to be really transforming the business? So those we kind of take into balance and see whether a thing makes sense. Obviously, we can't comment on a particular kind of asset.
Allow me to read between the lines of what you just said, that given the fact that, as Mr. Kotak pointed out, we're in an environment where banking itself is being disrupted on account of technology, would it make strategic sense to go in for an IDBI Bank, which is largely a legacy bank, and at the same time, forget the valuations, does it even make strategic sense for you, given your aspiration of wanting to be digital first today?
Your words, not mine.
So would that be a fair assumption?
I kind of laid out the case, right, Shereen? We look at every single thing. We see how, and we take a very, very balanced and a thoughtful view.
You haven't shied away from inorganic deals in the past, Mr. Kotak. As you look at 40 years, or forget 40 years, 10 years on, and I know you can't talk specifically about IDBI Bank, but what is the inorganic aspiration? How crucial do you believe that is going to be for the future?
You have to look at your model in terms of what makes sense. And I'll give you our out of the box. Not many people recognize that in 2014, we took a 15% stake in MCX. At a valuation of 450 crores for 15%. MCX market cap today is 50,000 crores. And we've just been patient investors. We strategically took a call that financial infrastructure space makes sense. We also took a bet on KFinTech, which is in the registrar space for mutual funds and others. And we took a 10% stake there, or 9.99. So then we took stake in NSDL. We have taken stake in Clearing Corporation of India, because we are great believers in long-term financial infrastructure space. Therefore, we are always ready to think differently. And when I look at the future, I look at the future very different from what we have seen today.
So a bank may not necessarily be part of the future.
I'm not saying that. I'm saying that we will build the future on the basis of what makes sense. And since you're talking about the bank, you have the two greatest examples in front of us. One, the largest market cap company in Brazil is a bank with no branches, new bank, $80 billion market cap. Largest market cap company in Brazil, not in finance. Revolut is now larger market cap than Barclays Bank. It's in front of our eyes. And I'm not saying we are going there, but for us to ignore all these trends would be an issue which we have to keep in mind, especially when the money is moving from saver to investor. Therefore, larger pools will move as money in motion. Therefore, we've got to capture it as flows rather than necessarily as being storage. And in that context, what are we going to do to build a future which is going to distinguish us from the rest of the crowd with 25 banks.
You know, the trends that Mr. Kotak spoke about then, obviously, as he pointed out, we're not talking about no branches in the foreseeable future, at least here in India. But what does that mean in terms of your branch expansion plans and eventually what it means as far as your operating costs are concerned? Because that, as you pointed out, is a key priority for you.
Sure. So, Shereen, just one more point. When we talk about inorganic, I'm just going back to our previous conversation. Look, we're not only looking at the bank, we're looking at other parts of our business as well. We're super excited about asset management. We like our life insurance business. We like our broking business. So opportunities, they could well come up there. And, we would look at them like we would look at any other opportunity in the bank. Coming to your question around...
You mean from a strategic investor perspective?
Or acquisition, Coming to your branch question, again, this is something that we've kind of talked about pretty consistently. We really believe that if we can blanket out the top 72, 75 cities of India, that's adequate branch coverage. That would take us to roughly 3,500 branches, give or take, but in that ballpark. And that's the kind of rhythm we are on. And if we can get there in the next 3-4 years, I think we'll be in very good shape. Of course, we'll have sales offices, of course, we'll have digital, but we think that's an appropriate network for a bank branch, and I think that'll hold us well.
And keep what Ashok said is very important, because some of the larger banks are now in 10,000 plus branches or around, or getting close. And you're saying that you don't have any plans to go down that road. But Mr. Kotak, coming back to what you said about the landscape changing and the environment changing as far as banking is concerned, I want to link this to the transformation from a nation of savers to a nation of investors, and what you believe that opens up by way of opportunities for the sector generally, but also more importantly for the bank and for your subsidiaries specifically. Think about, I think you have to really focus on verticals. Just think about brokerage industry. The dominance which Zerodha and Grow have shown. They were nowhere. How are financial institutions preparing themselves for being disrupted? The challenge for Indian banking is most banks have assumed that they're in a comfortable moat with regulatory protection. In my view, the underlying business model is undergoing a structural and transformational change by the customer. The customer is changing the rules of the game. The customer will decide what to buy, what to do, where to put the money. And we as financial intermediaries, rather than calling ourselves bank and getting into a comfort zone, we as financial intermediaries have to go with the flows.
You said that Zerodha, Grow were nowhere, and look at where they are today, not just in terms of size, but also in terms of profitability. Is that a disappointment, not just for you specifically, but also for large incumbents?
I think the challenge for incumbents is complacency of success. And it needs to be shaken. It's true for a company. It is probably true for countries. The biggest danger for countries is to believe that we have arrived. There's somebody out there who's eating our lunch. And a sense of paranoia is the core to building sustainable business.
What are you most paranoid about today, and how do you play catch up in an environment where your lunch quite literally is being eaten by somebody else?
No, Shereen, I'm completely in this camp of only the paranoid can survive. And I think Uday and I share that quite a bit. Now, having said that, I think there are waves that kind of come along. And if you catch a right wave, you can ride to the top. And I really believe technology is something that could provide a great wave, which allows us to kind of jump forward. And if we get that right, that could be a very big deal. I'm very proud of the fact of what the team did during the technology embargo. We just didn't, solve the problem. We really went and said, we're going to get this right. And continued investment there and continued focus there to help us drive that as a competitive advantage. Not easy to do, obviously, but is something that we are very focused on. And I think that is something that could be a wave that we could catch.
So, you said that you're proud of what the team managed to do during the tech embargo, which was, of course, put in place by the RBI and the restrictions that you had to deal with. But as you see the future today, and whether it's AI or it's agents and so on and so forth, where do you believe you are? Are you on the first chapter of this AI book, or do you believe that you've been able to move further?
It's such uncharted territory.
That you don't know which chapter.
It's impossible to say chapter 1 or chapter 10. But are we spending a lot of time thinking about it and actually putting stuff into place and starting to see what's possible? Yes, definitely so.
Mr. Kotak, how do you believe that this is going to play itself out for the bank, but also for the sector over the next few years?
I think AI reminds me of two historical realities. One was railroads in the US, and the second is electricity companies. If you think about electricity companies, electricity invention changed the world. And it's a reality today. We take it for granted, but when it happened, it was a game-changing event for the world. But almost none of the original electricity companies survive today. Therefore, AI is game-changing. But how to play AI is still early days. The question for our country and each institution is, are we going to be the original creators of AI the way the US and China seem to be doing? I think we have missed that original bus. It's gone to these two countries. We are more likely to be users. But who knows, ultimately, smart usage with adoption may turn out to be a better model than having to spend trillions of dollars in building the base. So you do not know the future, but in any case, the first round of the battle has gone to US and China.
But I want to link that to the point that you made about being early investors in the India financial infrastructure story, because you believe that that was in fact going to be beneficial for you as a financial institution. As you look at this AI wave and what it could potentially do, could that be the next leg of investments that you choose to make?
I think the bank will have to do what makes sense for it within the technology and financial infrastructure and financial services area. Therefore, I'm sure the bank will look at within the financial services space if things make sense. However, broader AI investment is not necessarily like angel or venture, is not necessarily that bank has done a lot of till date.
You want to stick to your knitting, right?
Yeah.
What we understand is financial services. That's why the investments that they made in MCX, KFIN, all those ones you talked about have paid off so rich. We understand that. We know that India is on a growth path. These will grow. Now, AI, yes, if there are applications of AI which we see which are going to be game-changing, we would be very interested. But are we going to invest in semiconductor companies, or are we going to invest in production of GPUs? I doubt very much we'll do that.
The only place we may play with that is through our alternate asset funds. And that is a separate business. It's a fund management business. The bank puts in some sponsor capital in that, but it's run as a separate business. And there the opportunity space is much wider.
Speaking of the opportunities, and I want to understand what signals you're getting from the market at this point in time. You, of course, have flagged the pain in the CV space as well as the MFI space. Does that continue to be a significant cause for concern, or do you believe that perhaps the worst is past?
So, Shereen, clearly in MFI, the worst is past, at least for us. We had always said Q1 would be the peak. Q1 turned out to the peak. Our Q2 results demonstrated that, and it's fast coming back to kind of normal. For about 2 quarters, we've said that the CV space is going through a bit of stress, particularly in the retail CV space. That kind of continues. I think that whole industry has gone through quite a significant transformation, and we'll see how that plays out. But that's very consistent with the commentary with our Q2 results.
But we've seen the GST cuts coming in. The hope and the expectation is that this will now be a sustained pull on consumption. What are you seeing on that front at this point in time, and how confident do you feel about that?
Yeah. So, Shereen, when they made the announcements right to the time that the cuts happened,
there was a pullback.
There was significant pullback. And therefore, in the last week of September, we saw a major surge. Now, some of it was because of the cuts, some of it was pent-up demand kind of flow through. We've seen October hold quite nicely. And frankly, across consumer expenditure, across OEMs, across into the rural economy as well. I suspect that, because of the pent-up demand, there'll be some leveling off. But generally speaking, should this lead to further consumption? I would say yes.
The demand environment here, domestic as well as what we're seeing happen as far as the global environment is concerned, and that uncertainty continues. How do you see both the global and the local mix playing out for the larger economy, but also for the markets, Mr. Kotak?
My sense on the macro is rural is doing quite well. In urban, the higher end urban is doing well. The lower end urban may be under some pressure. On the global side, of course, there is a Mr. Tariff world. So we have to see how that plays out. I would like to believe that India, which seems to be in a penalty box with the United States, with a net exports historically, which has been net $50 billion plus, how much of that gets impacted and how much of the impact on GDP, and when does the embargo on India with reference to tariffs linked to Russia go away. But if I look at the US tariffs at some point of time, sooner rather than later, I hope, come back to between 15 and 20% range, India can withstand that quite easily. 50 is tough, but between 15 and 20, if we settle, I think we have a pretty comfortable zone. And there is also a very big positive, Shereen, on the structure of our current account. Thanks to sustained low oil and oil's mix in the total GDP dropping, India is in a much better structural current account position and a current account deficit which is much more easily financeable. So that's a big plus for the Indian economy on a structural and sustained basis.
But what was all of this going to mean, Mr. Kotak, as far as the currency is concerned? And we've seen, a significant move on the rupee. Now, assuming that the deal goes through and we do have an agreement and we see a reduction in tariffs, which way do you see the rupee headed? And if we don't see that scenario playing out, what do you believe the currency is likely to see?
Current account, I don't think is going to be the main pressure on the rupee. The rupee is determined much more by FDI and FPI flows. And that is where, if you look at March 25, net FDI into India was almost zero. And there has been a boost to FDI now. And I'm glad that even banking is now seeing positive FDI. Keep in mind, private equity is classified in the FDI bucket.
Yeah.
So some of these efforts by the government to encourage FDI or allowing 100% in insurance are efforts to ensure that India's net FDI remains positive. But against that, private equity for old investments, and including some strategics, have divested at high values. The Koreans realize the value of their Indian asset is more than probably their own asset in their own country.
Yeah.
So that's great value creation by India for them. And as strategics also, they are monetizing partly. So is private equity. And till date, for whatever reason, FPI flows have been negative. Therefore, the valuation of the currency is less driven by trade, more driven by investment flows.
You talked about investment flows, and we've seen FPIs make a little bit of a comeback into the markets. What do you believe is holding them back? Is it a valuation issue primarily, or is it also to do with structural issues like capital gains? And again, we're sort of seeing this clamor build up that's the next reform that the government should act on.
Shereen, I'm sure a lot of portfolio investors are asking the question. There are easy parts in the world to make returns today. The most obvious one is United States, and we discussed this. US market cap is close to 70% of global market cap. And the kind of returns US markets have given over 5 years and sustained, and with earnings coming to the large companies, are pretty enormous. Therefore, there is a fundamental view of the shrinking size of emerging markets in global market cap. And that, along with valuations, which are reasonably rich, make global investors ask the question, is the best place to put money in India or Korea?
So do you think capital gains move will actually help? Do you believe it's needed?
In my view, the issue really is back to what's a fair play. Okay, you have a situation where on interest earnings, Indian taxpayers are paying 39%. And on capital gains, Indian taxpayers are paying 12.5%, or with surcharge and everything, 15%. And then you have global investors who have been brought at parity at 12.5%. So how do you draw a sense of equilibrium across the different classes of taxpayers? What is fair play? And even today, one of the main reasons why you're seeing so much Indian investor flow into equities is clearly tax arbitrage between capital gains and interest income.
Well, you know, speaking of this tax arbitrage as well as the flows that we've seen from the domestic market, domestic savers into the equity markets, Mr. Vaswani, I mean, you know, what does that tell you about the opportunities that it opens up for the bank going forward? I mean, you know, who would have thought that we would have seen so many of these new age companies list back-to-back listings, and while one can quibble and argue about valuations, still being able to do well? What do you make of that, and what does it signal now as far as priorities for the bank are concerned?
No, Shereen, this goes back to where we started, right? The fact that Kotak is this financial conglomerate, which allows me to deal with a customer, whether he wants to kind of, you know, be a saver or he wants to be an investor. And nobody is just a saver or an investor, but the ability to just do it seamlessly across everything that he wants to do or she wants to do is a huge advantage. And the fact that we own all these companies, all the subsidiaries, 100%, means there's no misalignment of interest. There's no misalignment of where we want to go. We can truly serve the customer across this kind of thing. So I look at it as a big opportunity.
Shereen, since you talked about Grow, the left lead manager for Grow was Kotak. And we are very proud about what they've done. Therefore, our investment banking franchise is rocking.
It's rocking. Well, you know, speaking of investment banking rocking for you, Mr. Kotak, what do you weigh in on the debate as far as valuations are concerned? And we've seen, you know, we've seen outrage on one end and explanation on the other. What do you make of the valuations of some of these listings?
I think at the end of the day, the institutional investors have a significant role in driving valuations. And it depends on the quality of institutional investors. Therefore, if you look at the quality of the books in some of these, they're world class. And best of investors have found value and a clearing price at which they have bought. And this is not like a situation where we saw a couple of years ago or 3 years ago. We've not seen any debacles of the scale and size in the listing market like 3 years ago, when stocks were valued at the issue at 100 and opened 80% lower. We have not seen any of those debacles. There may be a flexibility or movement in valuation which is 5, 10, 15% up and down, but that's markets. But broadly, I think the investors have become much better at evaluating and giving a pushback to get fair valuation and clearing price in the market.
So, you know, coming back to the bank in specific, what would you believe are your biggest challenges or risks today? Cost of funds, I imagine, is right up there, perhaps amongst the top challenges, top risks. What would the others be? And how much is the cost of funds hurting you today?
No, actually, Shereen, if you look at it from an industry perspective, at least private bank, we are pretty much at the best, among the best from a cost of funds perspective. I think the key is, look, at the end of the day, deposits are our raw material, and getting raw material at a cheap price obviously helps you grow easier on the asset side. So it's something that we pay a lot of attention to. And how do we kind of continuously grow it through different segments of customers, through different products, different businesses. So for example, we have a domestic custody business, and we are unique, and you know, it's a fantastic business for us that generates a lot of current accounts. So how do you take a whole range of activities to keep that cost of funds low and continue to grow. Obviously, we're always careful of the risk environment. I mean, Uday talked a little bit about it, right? As to what's happening with the urban consumer, particularly at the lower end, and how do we deal with that? And then technology, Shereen. This is something which, like I said, has got the ability to really get us to differentiate and get us to become far more efficient, far more productive. And so it's really, at one level, a very exciting place to be because we can make a big difference.
Well, you know, how do you see the metrics change for the banking business given the transformations that you spoke of and the metrics that the market has gotten used to? How should this recalibration now be evaluated in light of some of these shifting sands that you spoke of, Mr. Kotak?
I genuinely believe it's going to be very tough for 35, 40, 50 banks to all make a play in the future. It's going to be fewer financial institutions were smart enough to manage the intermediation business, and banks which realize that they are in the financial institution business and not a God-given right of being a bank.
And so in this context, you believe that the government's attempt or move towards the next round of PSB consolidation is not just necessary, it's warranted?
I think the government is moving in the right direction to get fewer, bigger public sector banks. I completely agree with that as a strategy. Having said that, I am on even a more fundamental issue. How do you ensure banks have a mindset which is service for financial intermediation and not live off regulatory moat alone? And that's the mindset change and breakthrough which is required.
And frankly, that's a trend that's played out globally. I mean, whether you look at it in the US, look at it in the UK, this financial consolidation that Uday is kind of talking about is a trend that's kind of played out in every market in the world.
So if this regulatory moat is no longer the moat that you can depend on, what do you do now in order to solidify the operating model to ensure that you can actually continue to deliver on the kind of promise that you believe you should?
There's only one answer to that, and that is tremendous amounts of focus on the customer, right? I've always said this, if you get it right by the customer, everything else will fall into place. So identifying which customer segments you're going after and making sure you're really delivering for that customer is absolutely critical.
You know, it's a 3-year tenure that you were appointed 2 years ago. You're going to be completing 2 years in January, Mr. Vaswani. How much of what you had as part of your mandate have you been able to do? What is pending on that bucket list?
No, I think, Shereen, there is, I would best call it work in progress. It takes time to kind of make these kind of shifts, right? But I'm convinced that this is the right way to go. And I think we've made meaningful kind of progress. Shifting the mindset is the hardest part. And if once you get that done, execution gets easier, it kind of speeds up. And I think we've kind of really moved on that direction.
So the aspiration to be in the top 3, grow the book, where would success lie on that front for you? What's the target that you're working with?
No, I mean, those targets have not changed. Everything remains the same. It's a mix of organic, inorganic, and I've spelled out what our framework from there is. We definitely want to be one of the survivors in a financial consolidation kind of place, thrive in that kind of environment, and that's how we see things play out.
Survive and thrive. In order to thrive, what do you believe will need to change? What will you have to accelerate? The pace of change, of course, is also going to be a key part of the strategy. What do you believe you will need to disrupt very quickly, not just to survive, but to thrive?
I think, Shereen, the signals for that come from outside us. Signals for that come out from customers. Signals for that come out of the changing times. And therefore, I would strongly believe the power of being able to dream a changing world, the power of being strong professional entrepreneurs with an entrepreneurial spirit, but keeping core professionalism, looking at these changing times is the key. If you look at the history of Kotak over the last 40 years, we were never the biggest, but we were always that firm which saw opportunity and moved quickly and got it to reasonable size. I think that alertness, agility, and an entrepreneurial mindset, while being focused on the principles of governance, is what can make Kotak happen. And you don't need to, in a consolidation game, you don't need to be a winner in everything. You need to be a winner in a few areas big time, which drives you to have the power in other areas as well.
So where do you believe you have that advantage today that you intend to double down on?
I think one of the things I'm very proud about is brand Kotak. I was very happy recently to see some data shown to me about how the spontaneous awareness of Kotak, the brand, has dramatically and decisively moved up across. And it's the brand Kotak across all the classes, bank, our mutual fund, our investment bank, our securities. So I believe there is a huge power of brand, there's power of trust, and along with that, ability to move at speed. And I am a great believer of a dominance of a new world driven by digital and AI. And the physical world may be remaining, just as print media remains, television media remains, but under serious threat, both of them, and moving much more digital. And people haven't figured out the revenue model to sustain in the context of the Googles and the Facebooks from an advertising point of view. But you can see the disruption in industry.
Yes, we certainly can see the disruption across industries.
Of course. So I think financial services is no different.
So, from the conglomerate's perspective, are there any spaces where you believe you don't exist today that you see the opportunity to get into either by yourself or in partnership with someone?
So frankly, Shereen, in financial services, I can't think of another product which we frankly don't manufacture. I don't think the massive growth is really going to come from horizontal expansion. I think it's going to come from depth. But I do think that there is a big trend that we are paying a lot of attention to, which is, I think what got Kotak here is really the deregulation. And every time there was deregulation, Uday was able to take a bunch of really, really smart people, throw them at it, and build out a new business. Insurance, AMC, investment banking, whatever it was. I think the next stage of real growth is going to come from the internationalization of the Indian economy and the linkage of the Indian economy into the global economy. And I think it's fascinating to see how India is charting its own path on this internationalization kind of move. Very, very different from the way Asia did it, very different from what happened in Latin America, very different from what happened in Europe. And I think that's an area which I think we can take advantage of.
Just building on that, the regulator's decision to ease up on M&A financing, etc., does it build on the thesis that you just spoke of?
Absolutely. So many of these cases, acquisition financing, look at the way UPI is going, Shereen. The ability to use Indian rupee UPI transaction in Dubai or Singapore, right, is fascinating. Look at the interest. Uday is right. A lot of people obviously are thinking of the US and US markets. But with everything going on there is a segment of the Indian diaspora who's now saying, you know what, maybe having one leg in India is not such a bad idea, right? Who is like the best position to take advantage of these opportunities, right? And I think those trends will play out, at least in my view, over the next couple of years.
Are you as bullish as Mr. Vaswani on this internationalization story? Because while we're talking about maybe the diaspora looking at putting or keeping one foot here in India, we're also looking at Indian residents keeping one foot outside.
That's part of the internationalization journey as well.
If you're financial services, you play the flows both ways.
So is this going to be a big...
I think it's an opportunity for sure. And we should be in the middle of it. I think we are very well positioned. We have presence in Dubai, London, Singapore, New York, and we are right there. And we have great relationships, of course, with major global institutions who have faith in us, trust in us. There's a very big alternates business, which is also we are focused on building. And that's all part of internationalization. And this two-way flow could also be a big opportunity. If you look at the success of many of the global banks, look at the US banks or the Japanese bank, they followed their customers.
And that's what you intend to do as well. But, Mr. Kotak, let me end by asking you, we started by talking about what the last 40 years have meant for you. But, as you look at the next 40 years, 2065, you said that you want to build an institution that outlives you. What is it that you believe, you would like to see this institution stand for over the next 40 years?
I think, first, very proud global scale institution from India. In many ways, it has the potential to be a symbol of what India can be. And I'll give you the examples across the world. Look at Toyota. It's a symbol for Japan. Look at BYD or a TikTok. It's a symbol for China. Look at Apple. It's a symbol for US. Look at JP Morgan. It's a symbol of what US can do. Look at NVIDIA. It's $5 trillion, larger than Indian economy. If I have to dream, I want Indian players not only to be proudly holding the India brand up their sleeve, but to create global scale and quality, which will make India proud.
Well, speaking of unleashing that aspiration and the animal spirits, Mr. Vaswani, finally, do you get a sense that we're seeing a revival in the marketplace? Do you see the entrepreneurial zest and zeal being unleashed?
Actually, I really see that. It is the India I've come back to so different from the India I left, and that I think is the big difference. The courage, the ambition, the zest, and frankly, that's what's led to our entire brand campaign. That we want to be the bank for that aspirational Indian, and if somebody has, hosla hai to ho jayega.
Hosla hai to ho jayega. Leave me with one short-term target that you believe ho jayega.
Shereen, you're looking to pin me on a particular number?
Absolutely, of course. I mean, I'm sitting in a bank. You have to leave me with a number.
What number can I give you?
There has to be a number that's top of your dashboard.
No, look, for me, and this is consistent with every interview that we've done, right? That getting it right by customer, right? Customers, the 4 segments that we've kind of narrowed on, and how we kind of accelerate that is the number one priority.
Will you leave me with a number?
I won't leave with you a number. I'll leave you with a dream. And I just left you with a dream. A financial institution which will make India proud.
Well, gentlemen, we wish you the very best of luck with fulfilling that dream, and congratulations once again on turning 40. 40 is the new 20, as you said, Mr. Kotak. So look forward to...
I said 2 things. I said 60 is the new 40, 40 is the new 20.
It's the new 20. Amen to that, and we look forward to speaking with the two of you again. But thank you very much for joining us here today, and congratulations again.
Thank you.
Thank you.
Well, with that, it is time for us to wrap up this edition of On the Record. From all of us here on the team, goodbye and many thanks for watching.